Welcome to the How Good Innovation Online series. This is the second installment, as it were. Today we're talking about investing in innovation with Molly Breiner, a ventures director at Danone Manifesto Ventures. Here's a little outline of what we're going to do. I've done some basic introductions. Molly and I will have a conversation for about 35 minutes. There'll be short interactive community breakouts, and then we'll come back together for Q&A. I also just want to point your attention to what we have upcoming. Tomorrow morning, actually, if you want more, we have a really amazing guest from Europe, Juan Lucas Restrepo, who's the head of the Biodiversity Alliance. This is one of the world's largest biodiversity research organizations. And he's speaking primarily on the Agrobiodiversity Index and the linkages between biodiversity and nutrition from a global perspective. Later this month, we have Melanie Allen from the Decolonizing Wealth Project, thinking about how do we decolonize wealth in agriculture. And then we'll go back to Europe for Syed Azam Ali, who is working with an amazing organization called Crops for the Future, focusing on 600 underutilized crops for food product innovation and planetary health and nutrition. So I hope that you will join us for all of those. Welcome, and welcome, Molly. Maybe you could just say hello and tell us, what is this manifesto? What is this Danone Manifesto Ventures thing? Why manifesto? What is it? Give us the story.
Yeah, awesome. Thanks everyone for joining. I'm super flattered to be able to share a little bit about Danone and our venture fund with you today. So Danone Manifesto Ventures is the corporate venture arm of Danone. We invest in, take minority stakes into startups that are in the ecosystem of largely food and beverage, but are really aligned to our manifesto and our mission. And the manifesto is, at this point I've memorized it, to spread health through food to as many people as possible. And that's really at the heart of what our mission is and what we're focused on at DMV. And we're a French company, so DMV wasn't an acronym that they were worried about having, but we do make jokes about being related to the Department of Motor Vehicles. With our manifesto, we're also really tied to how and what we believe that should look like for Danone. So you'll hear, or for any of you who are relatively familiar, one planet, one health. And we really believe that the health of our people is very closely interrelated to the health of our planet, and you can't really have one without the other.
Awesome. And how did the fund get started? Like, it hasn't always been there. What's the origin? What's its genesis inside Danone?
So there's been a lot of food and beverage companies that have started CVCs, corporate venture funds, in the past, call it decade, but more recently in the past 5 years. I'd say the catalyst of that, which is kind of answers your next question, Ethan, so I'll answer them a little bit out of order, but there has been so much disruption happening in the startup ecosystem at the expense of larger organizations. So if you look at specifically in food and beverage CPG grows, call it 2 to 3% year over year. The most recent stat that I did look up for this meeting was that of the growth that's happening, 70% of that is coming from small and medium-sized businesses and private label. So if you roughly split that in half, 35% in small and medium, 35% from private label. So the larger companies, of which they have 80% of the market, they're only contributing less than a third of the growth, 30%. So when you see what's happening in the disruption, a lot of companies have started CVCs to help be more nimble, be more agile, and be more present in the disruption that's happening from all of these startups. And I'd say with that is kind of the realization that big CPGs they're big ships. They can only move as fast as a big organization can move. There has been a lot of effort you've seen kind of across the board in moving more agile, whether that's being closer to the consumer, changing digital media habits, innovating more quickly, but they're still big organizations. And so to the degree that we as DMV can kind of act like a speedboat and be much more nimble and quicker, in making investments into those startups, that's kind of the solution in which we facilitate a lot of the emerging trends that are happening.
And so was there a specific, I don't know, instigator for DMV in particular within Danone? Did Laurent say, let's do it,
Yeah,
or
so it was Emmanuel Faber, who's our CEO, had this idea, and he was really the sponsor of that, which is great when the CEO is the sponsor. So made that happen pretty quickly in 2016 together with Laurent. And they did spend a while kind of thinking about what should the role be, how are we going to be different. And I guess I can speak to that a little bit. So if you think about CVCs, of which there are a lot, really a lot of our difference comes down to the meaningful support that we add and the collaboration that we do within our portfolio companies. And everything we invest in, we look to identify strategic partnerships. And then addition to that is our international lens to things. A lot of, specifically in the food and bev space, you kind of have a number of players who are domestic focused, and we really take things with an international lens.
Yeah, I mean, it's very interesting to see the CEO of Danone, Emmanuel Faber, so interested in startups and looking to and calling out. I saw him on an AI for Good conference, and he was speaking about some of the investments both that Danone has made, but then also partnerships with the company that were really focusing on what's at the edge, what are these startups doing, how can we collaborate to move this forward. So is there anything different in terms of it being a CVC, like a corporate venture arm that is there anything different than that, and say another food system investor who's like another fund who just happens to be investing in food, like what is it that makes you sort of unique in that way?
So I think it's a great question. Traditional VCs, while they might have similar mandates to us, are largely still benchmarked or evaluated on their financial returns. And often that, or almost always, unless it's a family office in a traditional VC, those returns have to come within a certain time window. So it changes the framework of their incentives and motivation. We, as a CVC, use evergreen capital, which means we invest off the balance sheet of Danone, and we're more patient capital. So we can kind of make longer term, more strategic decisions alongside our portfolio companies. But really the value add we have is that, and how we think about things is that our investment strategy is multifaceted insofar as we do look at financial returns, and we need to justify our investments in that regard. We're not just here to lose money, but we also look to effectuate change both within the startup system, but also within the Danone world. So that means bringing awareness of trends, of what our portfolio companies are doing, kind of driving that agility I mentioned earlier of startups, how are startups doing things, into what I call the mothership. And adding a lot of strategic knowledge. When you invest into a food and bev startup where maybe it's a first-time entrepreneur or they're just kind of uncovering something new in a space for them, bringing that institutional knowledge is also meaningful on our side.
Yeah, it seems like becomes a very clear path to potentially scaling, or at least support with figuring out how to scale up, as opposed to maybe a VC who has helped companies scale but doesn't quite know what it's like inside of a $30 billion business like Danone.
Yeah.
And so
the other a little bit tricky thing that we navigate is we do make minority investments, but we can also be the ultimate suitor. So like if you think about that from a financial perspective, you can sort of think of it as we're dollar cost averaging our investment down, meaning if you invested at a company, let's just make it up, at $10 million, and then you ultimately bought it at $100 million, you've had some percentage that you got at a much lower price. And that way if you think about the disruption side of startups most closely into food and bev, it allows for better return on M&A.
Cool. Has that happened yet?
Yes. So we acquired Michel and Augustin, which was a cookie company, like a very activist food and beverage company out of in France. And then we also have a few other companies that are doing very well, in which we hope to be or plan to be the acquirer.
Exciting. Yeah, that makes a lot of sense. I'm not sure which way I want to go. I'm curious, maybe just give a little bit of your story and backstory. Like, how did you get to Danone Manifesto Ventures? Why did you, what sort of drew you to work in this way as opposed to at another VC fund? What is it that drew you to the food system? Just a bit of backstory would be awesome.
Sure. So I guess over my almost 10 years in CPG, I have really seen the gamut of billion-dollar brands, working at Unilever, which is one of the biggest CPG companies in the world. After Unilever worked at a call it medium-sized $100 million business where we still saw double-digit growth, but it was getting acquired by Danone. So moving into what looked like a acquisition into a bigger organization. And then I went to a much smaller, leaner startup that was sub $10 million. So I've really seen kind of the life cycle of large, medium, and small, which that brought a lot of value to CPC, in which we look at large, medium, and small. We are a large organization. We invest in medium-sized companies and also small. So from that standpoint, I think it adds a lot of credibility to be an investor who's also been in the shoes of the entrepreneur or sat on the other side, understanding the pain points in the life cycle that various companies are in. And it's been interesting to sit on boards or go through diligence with other investors who have just been financial investors. And I think it adds a lot of credibility to our team, having been operators and lived and walked in the shoes of our companies. So, I kind of, Danone acquired the company that I was working for, which was Happy Baby. It's organic baby food business. I'm personally super passionate about food and beverage and nutrition and wellness. I spend a lot of my personal time reading books about it, going on diets, feeding my kids wacky stuff. And so the intersection of the two, and to be able to have a mission and a mandate like we do at DMV around health through food just really aligns to my personal interests. So I'm pretty lucky in that regard.
Awesome. So as you look out at the broader food system, as you said, you're looking at the large companies, you're keeping track of them, you're sort of seeing mid-scale that have already grown, you're seeing these startups that are just popping in with a new idea and a new direction. You have this very full view of the food system, especially in the CPG space. Where do you see a need for disruption? Where are things, like working in a way that are, I don't know, calcified or a little like in their inertia, or where is there actually opportunity to disrupt the system?
Great question. So I think my answer to this actually starts with the government in terms of how we would accelerate innovation. I think there's a ton of innovation that's happening in the food system, both in what consumers are demanding and what technologies are being unlocked. I think we're going to reach sort of an upper limit on things like plant-based alternatives in the meat world until things like animal agriculture subsidies start to change and shift within the government organization. So I actually remember from 4 years ago hearing this stat that of the 38 billion, I looked it up again, so 38 billion in the US government spends $38 billion in subsidies, food subsidies every year, of which less than 1% goes to fruits and vegetables. So I think we spend like 35 billion subsidizing meat, and the rest of it, or maybe it's 30 billion meat. There's a portion of that, obviously, that goes towards grains, but such a small portion of that is subsidizing fruits and vegetables. And there needs to be a shift in that. And in order to get people to eat healthier and eat better, the food pyramid is finally evolving, which takes a long, I don't think it had evolved since the 1970s until a few years ago. But as that evolves and we realize we should be eating less meat and more fruits and vegetables, I really hope that government subsidies evolve alongside that. And I think when and if that happens, there will be sort of this acceleration of how and what people are eating. Because right now, I mean, as long as you can get a hamburger for 99 cents, people are going to continue to eat that.
And so would DMV ever consider investing in a startup that in some way was disruptive on the regulatory side, like that tried to push and change that side of things forward, if you're seeing that as such a big unlock for the food industry?
I think that would be awesome. I haven't necessarily, I think if that were part of their advocacy or part of their DNA in supporting or promoting something like that, absolutely. But their core business would need to be tied to something that was more related to our thesis or creating a product. We wouldn't invest in just an advocacy group, because we still need the financial return.
Right, of course. Okay, what else do you see that's exciting out there? So yes, regulatory change, that would help unlock more of the plant-based, but like, where are some other either individual exciting ventures or initiatives, or just like, what else would you want to see?
So I think the microbiome is really interesting, and how and what we're coming to understand about gut health, and pretty much gut connectivity with everything from your brain to immunity to and everything in between, the trajectory of an infant and child's health. There have been a lot of technology unlocks from a diagnostic standpoint of understanding what your gut looks like. And then through that, I think as we come to understand more and more what a healthy gut looks like, what different kind of populations of guts could look like, I think it'll dramatically change for people how and what they think about the foods they eat, the biodiversity they need to get into their diet, and or just specific things if you have some kind of gut dysbiosis that is impacting your mental acuity, I think it's like 30 million Americans suffer from some version of irritable bowel syndrome. And so to the degree that we can really help change and effectuate that with microbiome, I think it's really interesting.
30 million, that's like 10% or getting on
Yeah.
10%. That's pretty significant.
And
what
it's
was the word you
chronic
used?
too, like it's pretty
Did you
terrible.
say dysbiosis?
Gut dysbiosis. Oh, don't make me get overly technical here, but basically it means that the bacteria in your gut is there's like there's leaky gut aspects of it in which the bacteria is leaving your gut because the lining of your stomach or the lining of your gut is not holding in the right bacteria, and also just the balance of your good and bad bacteria is out of whack.
So fascinating. And it's really interesting in that you've touched into one realm of biodiversity. I was also just seeing a question from Rebecca from IDEO, who's thinking a lot about biodiversity also. So yeah, I'm just curious how that sort of aim on microbiodiversity in our gut, how does that connect with Danone's larger aspirations around biodiversity?
Yeah. Well, I think you've sort of just answered it, which is your gut health is related to the diversity of the foods you eat. And right now we all live on a generally like 4-ingredient diet. And even getting people to eat a more diverse amount of foods and types of foods is really important, and introducing those more frequently. So I heard an interesting point the other day, which was, if given the choice between eating 10 pounds of kale or 5 pounds of 20 different fruits and vegetables, like definitely take more diversity than just eating a lot of kale. Because in kale, sure, you're going to get fiber, but you're getting the same prebiotic, you're getting the same micronutrients over and over. And so I think it's getting people to really, think back to kind of the fundamentals of eating a rainbow and getting those foods. But, I think with that is access to all of those types of foods.
Yeah, and this is really interesting, also related to the One Planet Business for Biodiversity Coalition that Danone helped to start about a year ago. That's an incredible organization. I definitely recommend you all check out if you haven't, and maybe Molly, you could say a little bit about it. But also one of the pillars for the One Planet Business for Biodiversity is actually doing what you were just talking about, boosting the diversity of ingredients of cultivated ingredients in the portfolios of the different companies. And this is companies spanning from Danone to also skincare. L'Oreal is part of it, to retailers like Walmart. So yeah, I just wonder if there's any more you could say in that realm.
I can give you an example. So within our portfolio, we invest in a company called Hungry Harvest that takes direct from farmers, both food that's potentially close to food waste, but also just partnerships with local farmers, and gets that food into the hands of those who need it. So both Hungry Harvest is not in the New York area for those of you who are here, but hopefully coming soon. But that's kind of an example of how we at DMV are trying to think about effectuating change. And through that investment, we're looking at how do we actually take some of the produce that they've sourced and procured and get that into Danone's supply chain. And obviously, it's a careful balance of volumes and again, big CPG only moving so quickly, but things we're excited about there, whether it's bringing in, a strawberry rhubarb or fruits and vegetables that could go into Danone's products.
Are there other like product types or ingredient categories or even different business models that DMV is seeing or has already invested in that you feel like innovating in the space?
In the biodiversity space?
Sure, you can start there and just the larger food system, but I'd love to hear if you have,
yeah. Well, so I'd say I'll answer that. The first question, well, so we invested in a company called Sun Genomics, which does microbiome diagnostics, which is why I know so much about this space, and also personalized probiotics. So I mean, what's really interesting is if you go take a probiotic right now, you don't know if it's actually right for your gut. You don't know if the efficacy of the strains that you're likely getting from an off-the-shelf product that's been sitting in the grocery store for a while. B, if those strains are actually the right strains for your gut. And C, as your gut evolves, the need for different types of probiotics can also evolve. So I think just the way we think about our gut diversity needs to evolve. But to answer your second question of disruption in the food system, we have looked a lot at plant-based alternatives and invested in a company called Nature's Find, which is trying to do just that. They are actually a fungus that grows, that they're able to grow at scale much more efficiently and effectively, that is very, call it malleable into different types of protein alternatives. And that's one way in which we think and continue to believe that the world of plant-based meats and also just plant alternatives is going to continue to grow.
So the pandemic is happening, and that sort of turned a lot of things on its head. Were there any, I don't know, I want to say like investment theses or kind of bets you had taken on different business models, different things that sort of flipped since the pandemic has happened? Like, and yeah, how are you seeing that affecting the startup space?
Certainly. So I'd say, first of all, any company that's in traditional food and bev that was looking to launch into retail in the first half, all of 2020 at this point, has had to massively pivot, whether it's delaying those innovations, bringing them to market differently. As you guys are probably all well aware, retailers really hunkered down and went back to basics. And are still actually doing so in terms of SKU prioritization, manufacturer prioritization. So being a small brand trying to bring new innovation to market was not the priority in the first half of this year. I think we'll see it, and we are seeing it pick back up, but that's been definitely a challenge. And not only that, but sampling. So how do you get the product or a new brand into people's hands? And having to kind of pivot from like a traditional demo or in-store sample into new channels has been something our companies have had to adapt to, for sure. I would say an interesting example of that is Farmer's Fridge. So for those of you who aren't familiar with Farmer's Fridge, it's a vending machine that supplies fresh, ready-to-eat meals, sandwiches, salads, pasta bowls, etc. Traditionally, their focus was, and most of their vending machines were located in airports and commercial business centers. They did have some representation in hospitals. So what they've done is really been pretty magnificent to see how quickly they've pivoted, but they prioritized putting vending machines in hospitals, which during peak COVID, when everything was shut down, it was so hard to get food. Doctors were on 24 to 48-hour shifts. They were ensuring that they had food and access to food in hospitals. And then the other thing they've started to pivot into is a direct-to-consumer. So in kind of the local, they're in commonly Chicago and New York. In those areas, you can now order Farmer's Fridge foods direct to your house.
Do you think some of that direct-to-consumer, that's an awesome example, thank you. And I'm just curious if you see direct-to-consumer growing overall, in its share of the market. Will that ever get to replace the sort of retailer route that we've gotten so used to in the last 50 years? Are you looking at that? And are there any innovations that kind of, not just the like meal kit innovation, I don't know, anything interesting that's happening in direct-to-consumer that we should be keeping an eye on?
I mean, direct-to-consumer has seen incredible tailwinds through all of this. I think being able to get food into people's hands consistently and reliably, especially when people were concerned or scared about leaving their homes and going to grocery stores, has been an incredible solution. But you also think about what's happened in terms of just the 3 jobs that parents are working now, being a teacher, being a stay-at-home parent, and also working full-time, that meal solutions have seen, I think, an incredible uptake and will probably become more entrenched into consumers' habits even as we come out of this, but are just managing sort of behaviorally how people think about mealtime.
Yeah. Another response that Danone Manifesto Ventures took as COVID really started to hit is you actually launched a relief fund. And so I'd love to hear, yeah, a bit more about that COVID relief fund, how it worked, some of the things you've supported.
Yeah. Um, so I'd say this is another like very special example of being a CVC versus a traditional VC, in which the way we think about capital and the access we have to capital at Danone is very different. And so as we were thinking about what was happening as COVID was kind of running rampant in the earlier half of this year, and the role we play around food health and getting access to food, we felt like there was this opportunity to, outside of the strict lens of our investment mandate, support our portfolio companies to kind of unlock and support them through what's an otherwise very difficult time. And it happens to be that a lot of our food and bev portfolio companies own their own manufacturing. And so the way we looked at this was kind of in line with how Danone focused and prioritized the business, which was people, health, and safety first, food supply continuity, and then supporting the community. And so we looked at our portfolio companies, and we created what we called the Danone Manifesto Ventures COVID Relief Fund, in which we offered our portfolio companies to apply for non-dilutive equity, meaning we gave them money without asking for more equity against various efforts within that space. And largely of the $10 million, what that was predominantly allocated to was the people, health, and safety. So when you think about all the workers who risk their lives going to the plant every day, ensuring that the yogurts and the coconut waters and the plant-based alternatives and the salads were getting manufactured, allowing and supporting those people through the right PPE, the right childcare support, overtime hours, etc. That was where kind of priority number one was for us. Same with food supply continuity. So I think putting in and installing the right protocols. So we leveraged a lot of the best practices from Danone as a major manufacturer and how they were setting up protocols as things were evolving and sharing and scaling that with our portfolio companies. So one great example was we actually sourced and procured masks and gowns, predominantly masks, of our portfolio companies where they could buy them from us at cost. Because as you guys probably all remember, there was this massive shortage of masks. And if you're in the food manufacturing business, getting those is a top priority. And so that was kind of one example of some things that we did on that side. And then from a community and support, again, a lot of our brands are, better for you and can and have been really helpful during COVID. So we supported them financially in their efforts to donate product to different groups that were in need.
Awesome. Yeah, it's a really big thing that you've done in supporting all the portfolio companies. How good is a portfolio company of Danone Manifesto Ventures? And a little bit different one. We're not producing products per se. And so I'm just curious if you could speak a little bit about the project that you're doing us through this fund, which is taking our platform, Lattice, our impact platform, and getting it out there and into the hands of some brands that could need it. So we're basically, with your support, donating licenses to smaller food brands hit by COVID, especially ones led by BIPOC individuals and owned by them. And so we're getting it out there and into their hands. Why take that approach? What were you seeing in that? And also just sort of from there, maybe talk a bit about Lattice and the platform and why you think it's useful or interesting for the industry.
Yeah, well, so I think now more than ever, we're realizing the importance of food supply continuity. And then kind of going back to the dangers of meat, like so much of the outbreaks that we've seen happen from COVID happen in meat manufacturing facilities. So I think to the degree in which we can support companies that are diversifying away from that, that's really helpful and important. But when you look at Lattice, and for those of you who are familiar with it, I should actually have Ethan give the 90-second overview, but it's really about understanding the baseline and the benchmarks of where you are today as a food and beverage manufacturer in terms of various sustainability metrics, where you want to go, and what how to do that concretely. And I think that that's really important for both large organizations and small organizations. And the way we looked at it was, in this world where there's so much disruption happening, it's actually small businesses that can continue to move quickly and adapt. And to the degree we can unlock that, while maybe their budgets are constrained or they're having to evolve with new channels and sales and fundraising challenges, how can we serve up this very important kind of solution to thinking about continuing to make great, healthier, better for the planet products?
Yeah, and this kind of goes along with, there's a question from Avi here about DMV's investment thesis, and then also kind of keeping that in eye with what Danone is doing in innovation and strategy. And is there a shift? I mean, investing in How Good is different in and of itself because we're a service company more than a direct CPG company, but are there other kind of parallel shifts that you're looking at and seeing from Danone and with DMV in your kind of investment thesis this year?
Yeah, so I think this year we've spent a lot of time supporting our current portfolio companies just because so much has changed and there's been a lot of evolution in the needs of our portfolio companies. But as we look out into kind of the next chapter of our fund, I would say what we've been able to do with How Good thus far and what we hope to do with How Good in the future should be something that we replicate in other areas within Danone. So if you think about, and just as background with How Good, we made an investment as the Danone North America's team was thinking about or working on a commercial agreement with How Good. I'd say the more support and continual kind of advocacy that happens within an organization, the more we've been able to unlock things around One Planet, One Health. And one of the tensions that we saw and continue to see is just big organizations really care about sustainability, but how they do it is often nebulous. The pace at which they do it can be slow. And us being advocates of solutions that can happen both at a domestic level, even within North America or worldwide, is both meaningful for our organization, but also for How Good. And I think the kind of the symbiotic learning that's happened, and the way in which we've gotten to a really robust solution is really exciting. And so if I think about How Good as one kind of great answer to us for sustainability, I look at other things like innovation just from a trend standpoint. If you think about it, CPGs have really struggled to innovate successfully. And how do we do that in really going back and understanding the consumer, looking at different tribes, doing that meaningfully and authentically, looking at whether it's nutritional behavior, channel behavior, like emerging things that are happening in which we can take a more kind of disciplined approach to innovation. It's really something that we think is interesting and that we could kind of be a game changer on that front.
Awesome. Another big thing that Danone has done recently is, not just recently, but including recently, is have a focus on regenerative agriculture. And so, yeah, I'm curious, Danone has made major commitments. Is DMV thinking about supporting that, or how does DMV sort of see this larger move in the rest of the ecosystem also towards regenerative agriculture?
Yeah, so I think a lot of what we do has generally a B2C lens, meaning we invest in consumer-facing businesses, maybe with the exception of How Good, though you do have a consumer aspect to it. And in that regard, when we think about the regenerative focuses that Danone has, which are soil protection, farmer empowerment, and animal welfare, kind of crudely, we think about a lot of that through the lens of companies that are also trying to unlock that and accelerate that through a proposition and their promise. Harmless Harvest, as an example, is a company in our portfolio who takes a lot of time and focus within the organization and the supply chain to create a healthy supply chain with sourcing and procuring organic coconuts, how they treat and work with their farmers, the regenerative aspect. They've actually gone upstream and done a lot to educate the farmers on how they can be more regenerative, increasing their yields, using cover crops to bring in more revenue for these farmers. and then working kind of downstream and thinking about how we take something that's traditionally just extracted the young coconut water and leveraging more of the coconut. So taking the coconut meat as an example, and they've now launched a coconut-based yogurt that you'll see in market. So in that lens, we really look at our portfolio companies and or prospective companies and how they can drive regenerative agriculture as part of their business.
Yeah, and Harmless Harvest has done an amazing job with that, which we've seen through some of the sustainability gatherings that DMV has hosted, but not just reducing food waste, as you were just explaining, but the trials that they're doing with different practices with the farmers, smallholder farmers in Thailand is quite amazing. Is there connection and connectivity between DMV and Danone's sustainability and R&I functions? And maybe the cool thing to add in here is, are there any best practices or sort of strategies that you've found to sort of make that go well?
Okay, so sorry, the question is, how do we collaborate with R&I and our sustainability groups?
Yes, and in a way, because what you're talking about is you've facilitated for How Good, for others, some of that interaction happening. So what are some best practices to help those collaborations happen between a CVC's portfolio company and a larger conglomerate?
Got it, clear. So I'd say as one example, or as part of the investment we made into How Good to accelerate the contract side of things, part of our investment was getting phase kind of 0/1 into the pipeline and moving forward. So there was real momentum and motivation on both sides to get that commercial agreement up and running. I think with that, there was a deep sort of understanding and working and commitment on both DMV as well as the R&I team to commit towards ensuring that there was kind of this longer term outlook and a commitment to really partner together. So I'd say in that regard, we were kind of working pretty closely with them. We wouldn't have done, and traditionally we don't do investments unless there is this sort of clear, identifiable way in which we can be kind of working together with our portfolio company. So that's one example. I'd say the other one is just, it really helps to have the ear of the CEO of Danone, and the How Good team really caught his attention, I'd say, kind of just over a year ago now, in the idea that we as Danone have a ton of really kind of noble commitments around everything from sustainable agriculture, but just within nutrition, health, and sustainability, and How Good really wanting to be a champion of those solutions. And Emmanuel Faber has since been a great advocate of How Good and what they offer.
Yeah, and I think there's a pattern there that I would name as a small service company that is offering, these top-notch sustainability insights and data insights to many larger companies, that the role of an internal champion is key. And DMV has been a huge part of that, but also just finding someone who is inside a company that can be a committed partner to follow the journey, not just look for a quick sale and be done, but to actually find what is the real reciprocity, what is the real shared value generation for both sides here has been huge for us. There's another question here that's around regenerative agriculture. If Molly, you said some aspects of it before, but yeah, curious if you have any more on how you or Danone is defining regenerative agriculture, and does that, I think the question is, does that in any way play into your criteria for making investment decisions?
Interesting. So yeah, I think I'm definitely not the foremost expert on regenerative agriculture within the organization. We've got a number of people who work on and are fully sort of focused on sustainability and how to drive sustainability at a macro level within the organization. I'd say how that translates across the organization and into DMV, there are a number of different funds that we look at and how we are complementary to them. And I would probably point towards the Danone Ecosystem Fund and the Livelihood Funds as really being on the forefront of how we are supporting farmers, getting access to cleaner water in emerging areas, et cetera, as as one of the areas of focus with regenerative agriculture as it exists more upstream in the supply chain, where we really focus is how do we bring that to consumers? How do we unlock companies that are trying to be more regenerative in their ways, and how do we take the practices that we know and understand within Danone and bring those to organizations that it's also part of their mission. So, in pretty much every food and bev company we've invested in, there is a clear or concerted effort into how to identify more regenerative practices.
Awesome. There's a question from Varun here who's basically saying, do you look for investors like syndication that you would, I guess, co-invest with? And then if so, what are some criteria and how should one reach out?
Oh, awesome. Well, yes, we definitely have other investors that we co-invest alongside. I'd say kind of a demonstrated subject matter expertise in a certain area, a collaborative mentality around how we work with portfolio companies or mutual investments. On the food and bev side, we like to be a meaningful partner. So we usually lead or co-lead investments. I'd say in the world of food tech and food exploration or the ecosystem around food and beverage businesses, we're more than happy to be a willing participant. We, as HowGood as an example, we sit at the table with a number of other investors who also have deep subject matter expertise in SaaS and how to build a service business, where we really come at it most complementary as a food and bev manufacturer.
Awesome. Feel free, if there's more questions, put them in the chat or raise your hand. I have another one that's more specifically about consumers. You've said most of your focus is B2C. What is the role of consumers in driving some of these large-scale changes towards biodiversity, towards regenerative agriculture? Are the companies just going to lead us all there? Or I guess it's like, what can an individual consumer do? And on a broader scale, is there a significant role still for consumers to play in turning all these ships?
Yeah, I mean, I think consumers have led the way in driving demand for a lot of these products and a lot of this innovation. When you think about everything that's happened from better for you foods, it was most notably seen by consumers who wanted these products and entrepreneurs and startups who said, I'm not getting these solutions from these big organizations. And that's kind of how the growth and the spawning of all of these startups into a better for you food space existed. I mean, if you thought about Expo West, Expo East, whatever, Natural Expo West, 15 years ago, there was maybe a handful of companies, and now it's exploding. You can barely fit in the capacity of Anaheim. And this is driven by consumers who are buying these products and demanding these products. And it's up to companies to find the right solutions, I think, behind those. And you've seen in kind of, I can't cite a specific poll, but you've seen that consumers are voting with their dollars, and they're saying, I want a company that stands for something that I'm aligned to, that's mission aligned, that is doing better for the world, and that's showing up in market share.
Absolutely, yeah. We've actually, I can put a link in the show notes to a talk we gave at Expo West in 2019 that used syndicated sales data from Nielsen and assessed the most regenerative products that are on the market currently. I'm not going to say they're actually regenerative, I just said the most regenerative, and showed how those products, we found about 5,000 out of about 1 million products that we looked at. Those 5,000 are significantly outperforming their categories. So those are the ones certainly that are growing. And then there's also been NYU IRI research that shows very similarly that the sustainably marketed products are growing at a faster rate, and they're increasing the speed at which they're growing.
And I'd say the careful balance to that is willingness to pay. Like you have to be careful, I think, and we're very mindful of over-engineering and expecting that every consumer can pay, X dollars more for a better for you product, when the reality is a lot of people are buying food with a material part of their paycheck.
Right.
And then it's kind of how do we balance better for the soil and farmers and planet with what can people afford.
There's a question here from someone on an iPhone. Is there a trend in using less preservatives in food and beverages?
Yeah, absolutely. I think you're going to see that not just from kind of the general baddies, but even natural preservatives are starting to be looked at more closely. So in a ingredient list right now, you can just write natural preservatives, and that could mean any kind of dozens of different types of preservatives. And consumers are waking up to the fact that that's probably not very transparent.
Awesome. Okay, I think I'm going to start to wrap us up here, and unless more questions come in. And Molly, I'm curious if you have any sort of, I don't know, final thoughts or things you want us to be thinking about, or that you would like both the startup community and also the investment community to be looking at that would help us, guide towards the larger aspirations, the manifesto that DMV has, and Danone's larger aspirations.
Yeah, I mean, I'd say we're always looking for new ideas and to be pushed to the frontier of kind of how to be better for the planet and better for people's health. So my email address is molly.breiner@danone.com. Happy to have a conversation or hear from anyone on their ideas as well.
Awesome. Okay, well, thank you everyone for coming. We've got a bunch more upcoming events, those free licenses to Lattice supported by DMV. There's going to be some webinars in November. We'd love to have cool, innovative companies applying. Thank you all for your time, and thanks, Molly.
Thanks, everyone.